The commission workshop meeting to order. And we have a presentation from Zach from James Moore and Company. You're up.
All righty, that was fast, but we are ready to go. Zach Shallowford, James Moore and Company. So we do have a PowerPoint kind of built out, I think, to with the main objective of just kind of providing for a guide in terms of an outline to say, let's touch on these different topics, really with the goal of, I know I've gotten some questions from Jerome and otherwise that we want to touch on and discuss just to help make sure everyone's on the same page, as well as just giving a quick update in general terms in terms of where we're at, where we've come the last, March, I guess 5 or so months. Since we've been working with you all past when we assisted last summer with the adoption of the current year budget, talking through some of that, just an update, some preliminary numbers as we gear up for the fiscal year 23 audit field work to begin, as well as just touching on a series of other recommendations, things that I kind of see as further discussions to come, or areas where action may be ideal sooner rather than later. So that's kind of my overall vision for this, to kind of start with some theoretical kind of foundations, just to kind of level set, get everybody on the same page, and then from there dive a little bit more into some of those recommendations and kind of where we're at and what it looks like going forward. I would say I think the intent is very discussion oriented, so feel free to jump in, interrupt me when you've got questions, because there's going to be a lot that we'll go through. So certainly it's one that we want to hit those questions as we're going versus trying to push anything off.
I have a question. Would that include the audience? No? Okay. Thank you.
But we do get to ask questions, correct? Since when?
Commission workshop.
State law said though that we can speak.
State law says you can speak before something's adopted, not at a workshop.
All right, so as I said, from the agenda perspective, first just the general update. So again, I believe we started working with you all October, November it was. So just from a quick perspective, bank reconciliations and the like, we're definitely behind from dating back to the spring. But from where we're at today, everything has gotten kind of caught up to what I would say, okay, we're now on a normal routine monthly cycle versus playing catch up for a number of prior months. In that, I did want to just highlight that we did identify a couple of reimbursements that had not been submitted to the DOT over the course of the summer. So we did find there about $20,000 that was in fiscal year 23. There was also an invoice for the first 4 months of the current fiscal year, about $35,000 that was billed to the DOT in February. So what we'll see there when it comes to the audit is the cash position will be down a little bit more, receivables a little bit larger than usual, just because that money was not billed over the course of the summer, but it will still be coming in. And that we identified in the audit preparation, looking at, okay, here's the contracts that are out there with the state, here's the revenues, why are revenues much lower when looking at what had come in from a cash flow perspective. Audit preparation is complete. We sent everything off to the auditors, I believe at the end of, Monday, the end of a week and a half ago, about 10 or so days. I believe they're starting mid this month from an audit fieldwork perspective. I would guesstimate a target probably of either late April or May for the audit completion and their presentation. But we'll be working very heavily ourselves, working with them, as well as when they have questions for Jerome and the team here. As I mentioned, from a monthly perspective, everything caught up to date now, kind of on that normal monthly routine cycle. And then, as I mentioned, we'll hit a few conceptual items first, talk about the general fund position, where we're at as of 9/30/23, and just kind of some thoughts and recommendations that we have going forward, as well as a few operational type recommendations. So on the conceptual side first, just want to talk about the budget, in terms of the overall process there. Again, just to kind of level set and hit some of the kind of overall areas, the way we look at it, the way you all look at it, how the budget and purchasing functions integrate. Just because I know that's one that can generate a lot of discussion. There's lots of different ways to look at it. I kind of have an accounting focus in terms of here's really the actual numbers, what happened, where the budget, at the end of the day, is really two things. It's a compliance tool. There are state statutes, of course, that govern the budget process. So ultimately, the budget is, number one, there's a statutory process we have to follow. And then after that, you get into kind of what I see as the normal intent of a budget where, in the private sector, generally, personally, otherwise, the budget's oftentimes, very much a management tool to say, here's what we guessed, what we expected to happen, what we were intending for to happen. I say some things, you can't control in terms of certain expenses, utilities, electric, otherwise that you may guess, but then if costs go up, there are certain things you can control, certain things that are out of our direct control. So to hit the kind of baseline from the statutory side, looking at the budget, is for any government in the state of Florida, there's what we call a legal level of control. And what that means is, by statute, what is the budgetary spending authority? So this doesn't get yet into the how do we spend the money, what's the approval process. This is just saying how much money are we authorized to spend as a city or as a governmental entity? So the Florida statutes basically set forth that unless you have something at the local government level that is more restrictive, in the charter, any ordinances, referendums that were passed, that kind of thing, that the statutory legal level of control is at the fund level. So what that means is for Oak Hill, we have one fund, the general fund. So if the total general fund budget is $3 million, then the legal level of control is that as a whole, the general fund spends under that total amount of appropriations. So if the general fund spends $2.9 million on a $3 million budget, irrespective of departments or otherwise, that would be within statutory compliance. When it's the fund level, that's your legal level of control. Oak Hill, everything we've seen is at the fund level. There is no, again, ordinances, referendums, any other guidance that we saw in the Oak Hill Code of Ordinances that restricts the city further than that. Because what some cities may have is say, hey, you cannot spend more than what's in your total budget at the department level or otherwise. There is a process to amend that. That's dictated, but in terms of what is that spending authority, we basically have that baseline of the fund level, so just looking at it in totality, and that really then kind of brings us back to the idea of saying, hey, it's really a management function. The example I kind of like to use looking at that is to say that your budget, we may have $10,000 in the budget for a part-time Parks and Rec person who's going to help with mowing and miscellaneous odds and ends. That person leaves. We have no employee to fill that role, and we go to an outside contractor, and we have then, let's say, zero in payroll expenses, because those are a different category, different line item in the budget. But we may now be over budget on the contract services side because we went and hired a lawn mowing company to take care of those services. So that's, again, where a lot of this is a guess at the beginning, but then it's an evaluation tool to say, okay, here's what we thought would happen. And then looking at those budget to actual variances, when you see some favorable, we're under budget on this line item, some that were over budget on a different line item. At the end of the day, it's when we look at it in total, are we in compliance? And again, seeing those variances becomes kind of that more traditional management tool to tell the story, understand, okay, what did we think was going to happen? What were our plans, intentions versus how did things shake out and why were they different? Again, a situation like that, employee left and we had to go to an outside contractor to procure those services. That kind of jumps into that second bullet point there. Just to touch on, again, the process. So the budget in totality is what we look at from the compliance side of things. That, of course, is made up, really two different procedural areas that establish the budget. The first, of course, is the public hearings and adoption of the budget in September. The two public hearings, we have a total budget, newspaper advertising, and so forth. All of that prescribed by state statute, again, very specifically in terms of the verbiage in the newspaper, the verbiage in the resolution, and so forth. Beyond that, once the budget is set, there is the ability to amend the budget via budget resolutions. That's one I think Jerome had asked me a few questions on. There's no specific rules in terms of timing or context, frequency, anything like that. The governing rule on budget amendments is that as a government, we have 60 days after the end of the fiscal year, so basically through November, to amend the prior fiscal year's budget. And that's to allow for, if invoices come in after year end, once you're kind of seeing the dust settle, to say, okay, was there anything that we did not expect that came in at a higher dollar amount, and does that put us over the budget in totality? So that the normal approach, that I've kind of often looked at is to say, to some degree, less can be more, to say, okay, if there's a circumstantial change in the budget, let's look at amending the budget for that. We've seen some governments where they've even amended their budget to equal actuals at year end, and I've always discouraged against that because that takes away from, again, the management tool side of things. We want to be in compliance at the end of the day, and we, of course, will monitor for that if there was something over, bring that for an amendment. But I otherwise kind of say, I like to be able to see, well, what did we think was going to happen, what actually happened, and let's use that as an evaluation or management tool. So again, just to kind of talk through what that process looks like, and the different options there. Again, knowing that budget resolutions are not required or otherwise, but are kind of more policy type driven.
Question, Zach.
Yes.
On what you're talking about, right? We have our meetings and our information, and we approve a budget, okay, for the year, and it's an estimate, right, of and what department or what area that we're going to spend that in, okay. Now, is it the overall budget, total budget, that we have to come back in and make a formal, or if in the example, and I'm just making something up, we need $2,000, $5,000 more in Parks and Rec, right? And so we move that right into that. Now, is that a budget adjustment, or is that just, we're just re-racking and using it as the management tool?
So it could be either. I've seen some cases where, cities may like to get very granular and say, okay, we know, let's take that payroll to contract services example I had. There would be two ways to handle that. One could be, well, this changed and we're still working through the rest of the year, but at this point, this kind of seems different than we expected. There could be a budget amendment to say, hey, this currently has changed. That's done at some point during the year, but it would not be required to be, because again, it would be okay at the end of the day to be over budget in one line, under budget in the other. So it really is kind of a management preference type situation. There would be no requirement to do it one way or the other, as long as, again, at the end of the year, we're under budget in total.
Okay, so when we make a budget amendment, that's up to us on what the granularity is, right? If we're shuffling money around from one line item to another line item, as long as we're staying within our total budget, then it's up to us whether or not we have to make an amendment.
Correct. Yeah, you can overspend and underspend line items.
Right.
If in total, we said, hey, we want to go spend an additional $50,000 for, a new roof, whatever it was that was not in the budget, and that would put it over, then we would have to have an amendment to basically appropriate out of reserves that $50,000 of additional spending authority.
Okay.
I have a question, Zach.
Yes.
Under amendments, required within 60 days of fiscal year end, you made that comment. And under that, it says encumbering of funds. In all the past audits, I've never seen anything encumbered. Want to expand on that?
Yeah. So the encumbrance, within governments, the term encumbrance is generally tied into the purchasing process. So if you had, an advanced ERP system, which the city has not had, that capability is not built in, never has been, is not currently. What you would do is you would have a purchase order system where you would activate a purchase order and establish an encumbrance. So let's say the auditors, their fee is, call it $30,000. What we would effectively have is, on day one, we could say, hey, we have a purchase order out there with the audit firm for $30,000. That would show as an encumbrance when looking at kind of budget views to say, okay, how much excess money is there that we have not earmarked specifically in the system related to that purchase order. Purchase order is basically a kind of a tie-in of regular accounting with budgetary accounting. Again, typically in more robust systems where you've got purchase orders coming in from all sorts of departments, and it gives, generally it's, larger cities or counties where you have a dedicated budget office, and they're basically kind of in real time trying to say, hey, here's what we have in these millions of dollars of purchase orders versus, and then as you pay an invoice, so let's say the audit, we have a $30,000 purchase order, we get a progress billing for $10,000, that would become a $10,000 expense in kind of, real actual accounting. And then that budgetary encumbrance would be reduced from $30,000 by the $10,000 to $20,000. So still, when we kind of looked at our projected audit expense, we'd have the $10,000 in actual plus the $20,000 in the encumbrance to equal an estimated, kind of real-time projection, effectively, is what it would help provide. So historically, a long time ago, there would be a, what would we call it? Reserve, or it would be called reserved for encumbrances in your financial statement. So what I'll get to in a little bit, and I could flip to if we want a quick visual, is in your general fund, what we'll see in the audit is we have our balance sheet every year presented where you have your assets minus liabilities equals your fund balance. So that's basically your private world retained earnings. That's what I kind of look at when I say what are our total general fund reserves, is that fund balance number, because that takes into account not just your cash, but what money do we have coming in the door, because the state monies, sales tax, things like that, there's a 2-month lag from when the sales tax is paid to a restaurant. They remit it the next month to the state, then the following month the state remits it to all the local governments. But in that fund balance structure, there's different classifications. So what I had noted there's what we call assigned and committed fund balance. And the assigned fund balance would be a way to kind of show that, hey, there is this designation of reserves going into a future year. Again, it's an informal kind of earmarking. Typically that encumbrance, process, if you've got that budgetary module, which again, we don't, would be that kind of just tracking mechanism to say, what do we have earmarked that we haven't spent as of year end, and that money would be able to potentially be shown as reserved for encumbrances. But now it's more of a manual kind of assigned fund balance presentation, and again, I've got that on a few slides.
So basically what you're saying for encumbered funds is that it's kind of like you write a check in your checking account. Those funds are spoken for because you wrote a check, but they haven't cleared yet because the check hasn't cleared. But you wouldn't take those funds out for something else because you've already written the check. So that's basically what we're
similar. Once you've written the check, you're a little further in the process. Yeah. It's more of, you haven't spent it yet, but you've effectively earmarked it.
Right.
It is more or less what it is, and that earmarking could be a formal or informal process.
Right.
Like if you contract for liability insurance, and your premiums are going to be $100,000 for the year, but you just write the first quarter premium. The whole premium's encumbered,
right?
Whole amount, but just the first part has actually been expended.
Yeah, so it kind of could be, again, if we had an ERP system with that whole purchasing process, then it'd be more of kind of an explicit encumbrance, because you would run through and see this vendor, what's encumbered, versus, as Scott mentioned, kind of an implicit encumbrance where, hey, we're under contract. This money, is spoken for, it will be paid type of situation.
Thank you.
All right. So budgetary authority and procurement, which kind of will tie back in here. Two separate items. I always just like to kind of touch on the differences between the two because sometimes procurement can get mixed up with the budget. Again, in terms of looking at the level of budgetary control, there are some cities where it's the department level. You could say, hey, our legal level of control is at the general ledger account level, which would get very cumbersome when you have slight, this one was transferred, or I say transferred, was overspent, this was underspent due to a change in circumstances or otherwise. But I like to kind of level set the budget process versus procurement. So the budget is effectively saying, legally, in accordance with state statute, how much money has the commission approved for the city to spend, where again operationally then that's generally your staff that conducts the spending based off of the appropriations approved by this body. So the budget is purely that legal level of authority to say that you have legally approved for the city to spend up to X amount of dollars that we have in the budget. So again, that's the legal side, and then of course the management side is just what do we do with it? How do we use it to evaluate and understand, how the year is going, what's changed, and that kind of thing. And that's, of course, a lot where Jerome will be, looking at that to say, okay, this changed. We had unforeseen repairs expense, so the repairs line, is already at budget mid-year or over budget. Different things like that. Again, that's where it becomes this management tool. But at that point, it purely is an operational management tool. There's no compliance or approval issues related to it. As long as we're staying within the confines of the budget in terms of what we spend, most of the decision making then does not come down so much to the budget, but the procurement side. So that's going to be, okay, Jerome is able to approve up to X in payments. If it's over a certain threshold, we get different quotes. If it's over the highest threshold, then it requires, a bid process potentially and or at least approval by the commission. So those two kind of go hand in hand. And again, if we had that ERP system with a complex budget module, we kind of tie in, we have, RFPs into purchase orders, things like that. But at this point, it's generally, separate functions. But that procurement side is where the transactional spending authority comes into play to say that, okay, we might set aside, $100,000 for a roof repair, again, using that example, and we say, okay, well, the total amount of that repair is going to be over the procurement threshold. So just the fact that we have $100,000 in the budget for a new roof does not mean we can just go spend $100,000 for anybody to get a roof. It would still be subject to what are the transactional procurement rules in play based on the size of that contract or expenditure. Any questions there? So I think we've hit the majority of this slide. And then again, that last bullet point, the compliance versus a measurement tool. Again, the way I kind of look at it is say, step one, are we in compliance? If we have to do anything there in terms of a year-end budget amendment or otherwise, then let's do that. But beyond that, where I kind of really focus is saying, let's use the budget to evaluate how we're doing when looking at actual and how that compares to just know, okay, did we overshoot this, undershoot this? Oh, this changed, these, insurance expense, let's say, went way up. Different things like that. And then, we adjust for that in the future year, having used that as an evaluation metric to say, hey, these expenses were over and that's going to continue on. So then we adjust for that in the following budget to, again, kind of restart that process of saying, here's what we think, here's our best guess at it, and then when the dust settles, we kind of see how it all shakes out.
When the city approves funding for a particular project, like the commission here, how do we track that with our accounting system so we know that we did that, essentially?
Yeah, so there's nothing in the system. That kind of comes back to if we had, a more robust ERP software where you had that purchasing module, that we had purchase orders and things like that, that would then kind of somewhat automate. Going back to the insurance example that Scott had, on day one, it would say, okay, we expect that we're going to pay this much in total insurance, and then those payments would not just be coded to insurance expense, they would also be taken off of that expected purchase order and those expected payments for the year. Without a system that tracks all of that in that, it's more of kind of that manual process to say, okay, we know that here's the insurance payments. There's a little bit more kind of manual knowing, okay, what's going on? How are we doing so far? Year or month over month, year to date, versus having something in the system, which again would still be a guess. So it's kind of one in terms of the guess and the expectations are built into the system, and that procurement module to say, here's this vendor, here's how much we expect to pay them. It's just a matter of that being in the system versus not in the system where it's being tracked manually and just from an overall monitoring in a lot of cases with a city this size to say, okay, we know how many monthly invoices on certain areas have come in, repairs maybe. We monitor and we say, okay, we're over. Were there one-offs or was it a timing difference? That kind of thing. So it's really just one where it's monitored more manually versus in the system, but either way would be just a projection looking at what's to come.
In the last couple of meetings, we've had situations where we voted for things, funding for things before, and apparently it has fallen through the cracks, or I don't know why, but we ended up, like just last week, we had two different things that the mayor had suggested that we get bids on that we already had voted on. And, it's just like we're like doing something twice, and there doesn't seem to be a system to prevent that, and to be honest with you, I don't even know if it's like when we vote on something and we approve funding for it, is that like an obligation that we are putting forth, Scott, or is that,
I guess it would depend on what you're talking about.
well, for example,
Look, if you entered a contract, if you approved a contract and then the city signed a contract obligating to pay a certain amount of money for a certain product or for a certain service, now you have a legally binding commitment. If you set aside money to say, hey, we need to study this, well, there's no obligation to go, now staff goes forward and tries to get the consultants to study something and then come back to you with the obligation to commit those funds to study. You say we want to set aside this much money, so staff, you can go ahead and get the necessary consultants and bring back the proposals to do this service, and then you would contract for it, that service to do that study, and you would compare what the contractual rate was or obligation to what you set aside initially and say, okay, we're within the amount we set aside, so we're good. And we'll go forward. Then you enter into another contractual obligation. So that's why I say it kind of depends on what you're talking about when you money. But adopting a budget doesn't obligate any expenditure of funds.
Go ahead.
What Joe's referring to is the playground equipment.
Yeah, that's one.
It came up and we voted to go ahead with that amount of money. 58,000, I think.
59,999.
Yeah. Well, close to 60 grand.
Right at, yeah.
And-
Shy.
And we voted, yes, but nothing happened with it. Normally, city administration would go after an ECHO grant to pay for part of the playground equipment. So it fell through the cracks.
Well, when you approved the 60,000, what was that based on? Did you go out for bids and you
Yeah.
have
Based on a bid.
Okay, so when you
Sealed bids.
you got bids, so then you had a bid, then after you got a bid and you awarded the bid, you should go to contract with that vendor to provide that equipment for that price.
I don't know that it ever went to contract.
I don't know.
It died right here for some reason.
Yeah, that was when we were going through, and we did not have an administrator
Yeah,
at that point in there, so we had approved, because of the bids, we had approved of almost $60,000
Yeah.
for that, but we never went out and paid for I remember that.
We have a contract.
We never signed the contract to say, okay, we want you to go do this. That never happened.
What you could have done is once you realize you didn't do that, you could have gone back to the vendor and say, hey, will you still honor that bid?
That's what we did.
And if they would, then I would go ahead and contract with them. Now, their bids usually are not good that, here's a bid, you have so long to accept it.
Right.
But if they're willing to extend it, then you could just go ahead and contract with them later on, because we're in that transition, we didn't go from bid award to contract.
This one had a 30-day on it.
Right, but as long as the contractor, the bidder would extend it,
Yeah.
then we went through the bid process, the bidder extended it, then are we under contract now?
No.
We went back to the vendor and he said he would honor that cost. Yeah.
Okay, so the next step is for the vendor to submit a contract, so that we then approve a contract to go forward. Now, you've already awarded it, so technically that contract does not need to come back to you for any further action. You awarded it, we have a contract, if I approve the contract, then you've effectively authorized either the mayor or the administrator to sign.
This one here, which we did up over,
That was in August of last year, so we're in different fiscal years. Does that make a difference?
Not from a legal authority, as long as from a bidding, you went forward, you bid, and as long as you went out and you competitively bid it, if that bidder is willing to extend their bid beyond their time frame for which they said it was good for, then you're still legally fine. How that gets accounted for, totally different issue.
Yeah, but on the budget side, a few different ways it could kind of fall out. If it's a major item to say, okay, we are saying, we expect to pay for, let's just say out of reserves, which in this case, if it was even in the prior year, we'd have to kind of roll it into the new year. So if there was a major item and we said we're approving a $60,000 contract, we're going to pay for it out of reserves or ARPA funds, let's just say reserves that were, so assume it was not in the budget. It's something that changed during the year, which again, that happens because we're taking a guess of how the next 15 or so months look. If there is a big item like that, that's a change. There would be the contract, as Scott said, that's a procurement issue to say, okay, have we gone through the proper protocol contractually to obtain these services? The budget side then could fall out really one of three ways. I would say the budget side. Let's say we know $60,000 project was not explicitly planned for at the time the current year budget was adopted. Three choices, really. One is at the time the contract comes before you, there could be a budget resolution presented at the same time. We do see some cities that do this. Again, not to say there's a small variance, but we have a major change in circumstance and we have this new grant, a new project we want to accomplish, whatever it be. And when that contract came to you for approval, Jerome could present here's a budget resolution to increase our Parks and Rec capital by $60,000, and that $60,000 is coming out of reserves effectively, or something like that. So option one, there could be a budget amendment done at the same time. Option two, which is kind of 2A and 2B as opposed to 2 and 3, option two would be let it ride. And to say, okay, it's not significant enough, or we expect to have other favorable budget variances where we are under budget. And what that could involve then is saying we let it ride, get to the end of the year, we're still under budget from a fund perspective in total, and no budget amendment is required. We're just going to see, hey, our Parks and Rec capital was $60,000 over budget, let's say, and we had $70,000 of other favorable under budget variances. So that would be 2A. 2B would be get to the end of the year, we're $50,000 over budget, of which 60 of it was Parks and Rec capital. So at that point in time, we amend the budget to say, hey, when we're looking back at this, we know we had this $60,000 project that was a separate entity from the original budget, not planned in there, and at that time do that budget amendment to account for the additional $60,000 for that project. So three different scenarios, all acceptable, permissible by state statute. Again, really kind of comes back to the management side of things in terms of what level of oversight we want to have and what that procedurally we want the budgetary side of transactions like that to look like aside from the legal side.
On the third one, you said, the option was to amend the budget, and what fund where did you say you would get that money from?
So it would be just based on the circumstances of the budget amendment. In this case, I was just assuming it was something that either, was going to be paid for out of reserves, or the other common scenario is, let's say that $60,000 was accounted for in the prior year budget. We had planned to do it last year, couldn't find a contractor, they had delays. So we incurred that expense in the current fiscal year. Not an uncommon scenario, because when we plan and project, it's not just a matter of what do we expect our expenses to be, but it also assumes anything that's not a routine monthly service or otherwise, that it's going to happen in the period that we assumed. So in that case, sometimes we see budget rollovers. If there are major items like that, to say, hey, we had this $60,000 project in the budget last year, it didn't happen, so we effectively had a favorable variance last year. We then, again, have to, each budget is its own entity, so it doesn't automatically roll. We would have to basically reappropriate and say that, hey, we had the intentions to spend this, and effectively at the end of the day, we would just be saying, hey, this is coming out of reserves. So our budgetary amendment would say we are going to spend an additional $60,000. And when you budget, you have to basically identify the uses of the funds, in this case, the expense, and the sources. And the sources of the funds could be a revenue that's new money to the city, or it could be the use of reserves, or what we call appropriating existing fund balance. So it would be one of those two scenarios, basically, to say where are those resources coming from that we are going to utilize to pay for this additional expense.
I got a quick one. On this particular one on the playground equipment. All right, got a contract, okay? $60,000. Do you make an amendment at that time for $60,000, even though you're going out for a grant at a 50% match that you don't know whether it's going to be approved or disapproved? Do you use the $60,000 as encumbered at that time, or do you wait to the end of the fiscal year to iron out, what's happened, basically?
Yeah, so that would ultimately be a policy decision. There's no right or wrong.
Okay.
If you said let's do it today, that's perfectly fine. If you said let's wait, we got until 60 days after your end to see how the dust settles. Both of those would be totally acceptable from a kind of legal budget perspective.
Thank you.
So here's an instance where we had approved, back in November of 2022, pipe to put in the Louise Park, because you had asked about that at the last meeting. So we did that already. And somehow it didn't happen. And so there's another example of where that, it comes back to haunt us, because if nobody's keeping track of it, we don't have any way to remember all that stuff unless, you have somebody on here with just an incredible memory. And so what I'm asking, I guess, is, because I have 4 different examples of this, and that's just what I was able to find with a cursory review of the minutes from our, and so I'm sure that there's much more. But the mayor was asking about, should we go out and get some bids for this, and here it is, where we already did that. So what I'm wondering is, how can we stop that from happening? Is it something that the commission has to come up with a policy for, or is it something that we can rely on you for? Or, how, with your experience.
Yeah, the administrator.
Well, we had an administrator.
But that person left before he
No.
That was in November.
And this one here
didn't
was,
get done.
yeah, this one here was well before she left. But, the funds for the ECHO grant, that was years before she left. It just, never got
Done.
never got done.
And was also never reminded.
And as a, more of a commissioner, but a concerned citizen too, I just think that it's it's in our best interest to keep track of things. I don't know, if, like what Scott was saying, some of it's legally obligated, some of it's not. If is any of this that I've described so far, something that we make a promise to the community that we're gonna buy playground equipment, but we don't do it, is that okay, or?
Well, I mean, you should follow through with whatever you promise the community, but is it a legal obligation? No.
No.
It's not a legal obligation to the
Good.
community. And it all depends on what we're talking about, and I have to agree with Commissioner Hyatt. That's an administrator's job. That's why you have an administrator say, okay, we've now approved this, we've got the ECHO funding, go start the project. And then the administrator coordinates with me, Zach, county. That's what the administrator's job is, to make sure we're going out for bids. And I don't know where we're at in that process, but in what you're referring to, what happened in November 22nd, I don't know if that was an award of a contract for work. Is that, if we go out for bids and we get a low bid, the next step is to, y'all award it, if it's the dollar threshold, is for your decision. And then we go to contract and the work starts. And then the administrator's job is to monitor that work to make sure it progresses along the terms of the contract.
Right.
Along with, there could be engineers involved and other stuff, but the administrator oversees all that, the engineers, the building official, all that stuff, to make sure that the work is progressing along the terms of the contract. And then if we get to the point where we have a contract, we have a contractual amount, and all of a sudden we are exceeding that, then the administrator says, contractor, you have to submit a change order in to justify this, or we have a contract amount that you have to complete this job for. Now, if something occurred that would justify a change order comes in, I would think either it comes to y'all for approval, unless it's a very small amount, but say it would come back to y'all for approval because you're changing a contract you've already approved. And then it would continue on along those ways. But it looks like there's some decisions being made by the commission that don't carry out after that decision is made. And I would say that's the administrator's job to carry it out. Well, after y'all approve, if you approve a award of a contract for a certain type to a bid for a contractor to do certain work, administrator's job is now to get the contract executed and let's start that work.
And
That's
then
the administrator's job.
as the commission, I guess, one of the roles is to provide oversight to the administrator, but how, would we just make policies and have them in place?
You
so they have to
could
follow?
say, look, as part of the monthly reports, submit status of approved projects.
Would we be within our rights to ask Jerome, like when he puts something in front of the commission for approval, like funding for a project, to indicate on his cover sheet, like where he intends for that funding to come from?
I was actually just gonna go
Yeah,
down that.
I would say yes.
Yeah, so I was gonna echo in terms of where is that oversight that it'd be Jerome, and we conversed a few weeks ago about payroll, basically saying, hey, looking at, forget if it was hours, wages, what it specifically was, but what's the impact of X? And we said, well, here's the total salary expense in the budget. So just looking within salary expense, I think we basically said, hey, Jerome, the total impact would be X. Where we ended up once the dust settled, because of course when the budget was adopted, there was lots of uncertainty over who would fill what positions, what's the rate of pay. We kind of said, hey, Jerome, within salaries, you're good. It's not even a matter of what else is there. To that question, that's exactly what I was going to kind of throw out there. Hearing this is, I've seen some cities where in an agenda item, if there's a financial impact, and with policy, it would say maybe no financial impact, but if there is a financial impact, it's probably, one of three things or kind of the questions that could be asked or what could be preemptively documented is basically to say, number one, is this currently provided for in the budget? If yes, then it's kind of a directly one-to-one. If it's not directly provided for in the budget, are there other favorable budgetary savings that we expect to experience? So for instance, Jerome says, hey, we've got a contractor that we're going to pay $1,000 a month to cut the lawn, at Parks, and we had a part-time employee. So he says, no, we don't have a line item for this contract services, but we expect to have favorable savings that offset this in these accounts. Or the third option to say, hey, is this something new? Is it something that we intend to use reserves for? And that may be, say, hey, this is where it's sourced from because it's a one-time item that's a priority of the commission. It's a roll forward of a prior year to say we had budgeted for this last year and didn't spend it. So we're basically reappropriating those funds. But if that were to kind of help close the loop and say, okay, we've got a financial decision in front of us, let's have that additional context to say, where is this provided for in the budget or what's the funding plan?
I can add a little bit go back a little further. The process kind of works in that you will get, especially for larger projects, you're going to get an engineer's estimate of how much that project is going to cost. And then you're going to have to decide is that something you want to spend? You can just say, we're not spending that kind of money. Or, okay, we're willing to spend this kind of money, and at that point, you're going to have to, quote, budget for it. You're going to have to say, where are we going to get this money? Or sometimes you say, I've heard cities say, look, okay, we know this is how much we got to raise. We're going to put up this much. Let's go get grants or other sources of funding to help fill the gap. Then you'll go to bid documents. Once you've made that decision and you have the funding in place, you go to bid documents and you're going to get bids. Well, you need to have a number of what was your budgeted amount to compare it to the bids, because one of the things you can reject all bids on, hey, everybody's over budget. So we got to reject all bids and redesign or start over or just scrap the whole project. So you're going to have to know, you have to get an engineer's estimate. Now, how much is this going to cost? You approve, yes, we're willing to proceed. Bid documents are then prepared. Go out for bid, you get bids in, you take the engineer's estimate, which you accepted, and compare it to your bids and make sure that your bids are within your original estimated amount, and that estimated amount has now worked its way into the budget somewhere. You now have that money. And then you proceed to contract to do the work. So you've got to know what that number is before you go out to bid. You got to. Or you just can't say, let's go and award contracts, and then we're just going to figure out where we can get the money after it comes in. That's not what we do. So you got to get an engineer's estimate on larger contracts. There may be some smaller things. I'm just talking bigger contracts. How much is it going to cost? Go out to bid, compare bids to budget, and then if you're within budget or if you're over budget, you either scale back, value engineering is what they call it. They kind of change the project to bring the price down, or you allocate more money to cover it. Then you go to contract with that person and you finish out the project. So you've got to know an estimate of what that cost is going to be. My advice is always know what this estimate is going to be for that project before you incur the the obligation to go to bid, to track the cost of going to bid, because you got to have an engineer prepare bid documents, which bids can be submitted on. And if you don't have the money, you don't want to waste contractors' time submitting bids if you don't have the money. So that's kind of the process I've always seen. And for instance, in Holly Hill, every time we go out for a award, an authorization of expenditure, there's always in there saying, this is within budget, we've budgeted this much money for the purchase of this truck in this fund, therefore yeah, we've accounted for this. It's in the budget, we budgeted for it, and if we budget for a truck one year and we don't buy it, it can be put into reserves, I guess, or it carries over to a truck purchase the next year. It's just kind of a carryover. But that's what I've seen done. And the thing that it would put, I guess I would obviously defer to Zach and Jerome on this, but the thing I would be cautious about saying, we're going to do what I'm going to refer to as global budget. Say, hey, we set aside $3 million, we haven't spent it yet, so we're good. Well, you don't know what obligations you're going to have in each fund going forward. You got to make sure to say, yeah, we haven't spent $80,000 that we plan to set aside for this project, but we haven't got to that project yet. So if we took that $80,000 and put it over here on this project, when we get to those last few months, when cities are typically cash poor, we all know that, when you get to September, those are your worst months for cash. You're cash rich in January. You know, that's when you get all your money, and then you got to make it work for the rest of the year. I would be cautious, and I think it put a lot of burden on Jerome to make sure, do we have, even though we haven't spent within the budgeted amount yet, that the commission has blessed, you got to sit there and make sure you project out, okay, we haven't spent this much money over here, but it's coming. We can't use that now. We got to make sure we actually have a savings over what we budgeted, as opposed to we just haven't spent it yet before we allocate it to some other project. So, and that's where I think historically we've done this, as I've mentioned it numerous times, that if I was in your shoes, I would just want a report, simple, says budgeted revenue, actual revenue. Just compare the two, and then budget items, large, not details, but hey, salaries, capital, just kind of whatever, to say we budgeted this much money and we've spent this much to date, so you know how you're looking. You kind of look, hey, you spent 60% of your salaries and you're only 40% through the year, you might have an issue there, or anything. You kind of look at it. Now, granted revenue, you're going to have zero, all of a sudden you're going to get 90% of your revenue in January. So it's going to look like, holy cow, we're going to make all this money. Well, that's not going to continue the rest of the year. It all comes in at one point, and then you got to make it work the rest of the year. So, but I don't know if I've helped you understand it, but this whole process is tied together. It's a long process, and going from the concept to cost to funding and budget to construction bid documents to going out for bid and awarding the contract could be a couple of years. By the time you go through all that process, it just can't be done.
It sounds like the scenario that you said not to do is what we do here right now at this time.
Not that I'm aware of. I mean,
well, like, take that park project, for instance, that was budgeted, or it was never budgeted for. And we ended up just moving money from one spot to another, and hoping that we had, to pay the contractor that went to work there, or if we would have budgeted for that when we took the grant, we would already know where the money for the contractor was coming, but we just shuffled it around. There was no, when we voted for that project here, there was no in there other than just the bid from the one contractor, and nobody said anything about where that money was coming from. And then it turns out later on that it's not in the budget, and so how did that happen? You see, so it is.
If the rabbit hadn't stopped, he'd have won the race.
Well, I'm just saying, it is like what you built to sell this, that would be something that we wouldn't want to do it that way.
That's not the way I would do it.
We get lucky, and that's not how accounting's supposed to work, I guess. I mean, I don't know. But I appreciate your insight there.
So that's just how I've seen it done. That's how, if I was you, I would say, this is how it needs to kind of work. So when you make a decision, you're making informed decisions along the way.
That would be quite a relief where you don't have to worry about it.
And that's where having
explain,
Yeah, I think that's where having like that fiscal impact. Where just from the conversations we've had, I know Jerome's. Here's $50 that I don't know if he explicitly had, and we're talking. So I know he's very in tune with that. And as we have gotten over the cleanup through September 30th, now next is going to be looking a bit at classification to say, hey, did all the expenses we've incurred in the current fiscal year go to the right buckets? Because in total, everything's reconciled. There's maybe some things that there's still adjustments needed to make sure, okay, this needs to get coded here to ensure that this vendor aligns with this general ledger account, because what could happen, and where we're going to work with your team to have a good list, is you could budget for something here, but then if the person keying in the invoice codes it to a different account, now you've got apples to oranges, and you've got to get those back on the same page. But once we've got everything on the same page, a well-oiled machine that things are getting coded where they need to be, we'll be able to, Jerome will be able to run real-time reports to help assess and make those decisions. So there will be kind of some where it's okay, Jerome knows this is out there, but when something new comes up, there will be good data to help make those decisions and present, okay, it's not just let's do this, it's let's do this and here's how we're going to pay for it. So, I mean, I think everything is in that direction to really have a good process around making those decisions with as much information as possible.
Yeah, so it's as it is when I came in and now working with Zach and his team. The information wasn't there. So, when your guys are asking or members of the public are asking, it's not that I didn't want to give it, it's just that it wasn't there. Zach and his team have been working to get everything put in a organized fashion so that I'm able to get that information because it helps me also. So I can come to you all and say, this is where we are, this is where we can do this, where we can get the money from. So it's almost at that point that I can get those types of reports that I need to be able to provide you the information that you need to make the decisions. So it's this close.
Is that something that you think is fair, Jerome, for us to, to have that
Yes.
in the
Yeah.
little cover sheet thing?
Yeah.
Because you put recommendations on there, and I just thought that would be a great place for that to be, right on that
Yeah.
sheet right there.
Yes.
Good, excellent.
Well, what I've always, like, compared to other cities, what I've always seen is a staff report similar to that. And then as part of that, there's an explanation and everything. And then down there's the fiscal impact, that Zach was mentioning in it. And sometimes you say, look, it's been budgeted for, or it says, we have excess funds that haven't been spent out of this fund and will be shifted over to cover this. So, but it explains it to you so you know where that's coming from. It helps Jerome in the future. He can say, okay, that's where we shifted the money. Commission approved shifting the money out of this account over here because we planned on buying something that we didn't buy and we're not going to buy it, so we have this excess money. Or what happens a lot is you budget for a position, you never fill it. Well, that cost that you set aside for that now is not going to be spent during the year. Sometimes that can be shifted around. So, but I think it's important for y'all to have it. I mean, I don't want to overwhelm Zach and Jerome to give you all this data, but it needs to be, you need to have some financial analysis, summary financial analysis so you can make an informed decision so that when you make a decision to spend money, you know that the money you're spending is there. That's, just how we all do our own finances. We don't work on credit cards here.
When I was reading through the audit report, when I got to the management letter, it was something that I had read that, they tell you the city's required to budget for foreseeable revenues and expenditures, blah, 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 and I'm sure everybody already read that, but he goes on to say that current audit findings, and he lists off several different grants, that were not budgeted for. And so when I was reading that, I thought, I wonder why that one for the park up there wasn't listed in here, because he had all these grants listed. So I sent him an email and I asked him why he wasn't in there. And Jack Haymore is his name, nice guy. But he came, we had an email exchange back and forth and also a pretty lengthy telephone conversation about it. And when he told me, he said, when he was listing off I asked him, when you come to the city and to do the audit, what is it that is there like a guideline, rule, things that you want from the city? And he starts going down, listing them off. And he said one of the things that he goes through is he looks through the minutes from all of the, not like the PLDRC minutes or something, but the commissions. Mm-hmm. And so I said, well, there was a resolution for that grant in the minutes. And he said, well, he said, we're human. He said, we may have missed it. And he said, but, and he said, what we use as a backup is the budget. He said, we go through the budget. And he said, if we would have seen that ECHO grant in the budget, we would have known, and went back and found it. And that was his explanation for why it's not, because he has like a list of all the different things that were, shortcomings, I guess, is what he's talking about in this. And that was his explanation for that, because it wasn't listed in the budget, and they didn't see it in the minutes, that's why it wasn't there. Pretty interesting, Our budget, it doesn't, like none of the things of these instances where I just showed about the playground equipment and the pipes and all that, none of that it's listed in our budget, and it makes you wonder, you know, what else isn't listed in there, you know? I don't know. And another question that I had, Zach, was about the reserve funds. So shouldn't that be in this budget somewhere, like listed in here somewhere? Because I can't find it in here.
So
I
not,
remember we took $70,000 out of the reserve funds to balance this budget, but not the actual reserve fund.
so that's normal, that it would just show basically here's the revenue for the year, here's the expense, and then if there's a difference, you know, we would say, hey, we expect $70,000 to be spent out of reserves or $70,000 to be added to reserves, basically as kind of a plug to say, okay, if we, to balance the budget, if we expect to have more revenue, then we're saying we have a use that's to go into reserves, or if we're going to spend more than we have of new money, then we're saying that we're using existing reserves to source the rest of the monies to pay for all of those expenditures.
A budget is an estimated income statement, more or less, to compare to something that's income and expenses. Reserves is a balance sheet statement. So that's an annual financial statement would show your balance sheets and other financial statements. Your budget is say, okay, we have this much money coming in, this is how we're expected to come in, this is how we expect to spend it. And that may, as Zach said, you may have to plug a hole with the reserves, or you may have surplus that you plan on sending to reserves. But actually seeing the reserves would be at the end of the year. Each year we do our financial statements, and that's when the auditor comes in and says, look, these are your financial statements. I'm going to compare your financial statements to what my audit shows of your financial situation. That's what the audit does. So, and that's how they that's where you would see the fund balance. You would look at it annually, but it would be at the end of the year. And the end of the year is like the 2022-2023 balance statement is really the beginning fund balance that you then look to, okay, our budget carries for this 23-24 year carries from when that financial statement ended. Because that financial statement is as of September 30th, 2023. Now the budget picks up the next day and goes forward, and you say, okay, if we're budgeting to spend $70,000 on reserves, we should have 70,000, we're gonna have 70,000 less than what this budget, this balance statement showed on September 30th. And then the auditor makes sure that our statements, our financial statements, what we're saying exists on September 30th, 2023, actually exists within a reasonable degree of materiality changes. They don't check everything. One of the things, the misconception about an audit is it is not a fraud. They don't check every transaction. They do sampling, which Zach can tell you a whole lot more than I do. I know, but it is not an audit, a fraud detection. They basically say, do these financial statements reasonably reflect the financial condition of the city as of that date within a reasonable degree of materiality? And what's our materiality? 10,000?
They auditors would calculate
that. So we, basically saying if our numbers are 10,000 off, that's not really going to materially change our financial statements one way or
I
another.
think he said we missed it by like 4 million or something this one.
What's that?
It was a lot. I think he said that it was like 4 million or something.
When you're talking about how grants are reported, there may be multiple ways to report grants.
Well, it was a budgetary, procedural, in terms of not, I think it was valid in terms of saying that, hey, the budget monitoring process, getting things in there was not where it needed to be, was kind of the gist of that. And they were saying, hey, here were these expenditures that weren't budgeted for. I think it was, I had reviewed that. So, yeah, that absolutely, I think made sense from when I was looking at those financial statements as well.
And he had referred me to the rules of the Auditor General. That was a fun read. But there was a lot of, things about
what year was that?
reporting requirements.
That's the fiscal 22 audit.
What kind of opinion did we give in fiscal 22?
It was unmodified.
Okay.
But so if I can just stop us for 1 second, because I've got a couple slides touching on these. So I think if we're going to naturally, hit some of these topics. So if we maybe kind of move through that, and then I think I'll answer some questions in doing that anyway, and then certainly any other questions as we get there. But I just know we're going to talk audits, going to talk fund balance. So if we hit a couple other things I want to touch on. We'll get pretty much right into those. I think it'll make sense seeing some visuals here of how I'm going to bring it together. Couple other conceptual items. Again, just when we talk about reserves, I always do like to highlight that I look at that as the fund balance. So your assets minus liabilities. Cash can kind of be a common, well, how much is in the bank? Again, talking about timing differences. If we've got receivables, the state money takes 2 months. There's the DOT money I mentioned, about $20,000 that didn't get billed over the course of the summer that has since been billed. So that's an artificial. Last year was about $20,000 in cash. This year it shows as a receivable, but it trickles down to fund balance the same both years. So I do want to just highlight that, that's really what I look at and what we'll talk about in a couple slides here. From a cash standpoint, did note there's currently 5 physical bank accounts. I know at times there's been confusion over where some of that money's gone and how it's tracked. I will talk a bit later about our recommendation to move towards a little bit more of what we call a pooled cash approach, where it saves the work of having these separate physical accounts, and we're able to track it from an accounting standpoint, which we've got that expertise and oversight to help ensure that that's being done appropriately. So we'll talk about that more later. From the interim financial standpoint, was again just going to talk about the fact that we're getting close to having a good baseline of what's set up so far in the current fiscal year. Look at classifications, get Jerome equipped as much as possible so that if a question comes up, here's the fiscal impact versus the, we don't know. The bank accounts haven't been reconciled as of a few months, back in the fall when that contract was up, things like that. So moving towards having a good baseline there. We were talking about the audit, just wanted to kind of hit a couple of things from my perspective, because we, of course, I'm an auditor by trade. More or less, where we've gotten more involved in this side of the house, just because there's a massive shortage of finance and accounting people in general, even more so in government. So we've kind of been gearing up to say, how do we build a sustainable model to help bring that expertise to smaller entities where you can't really go hire a full-time, highly qualified finance director, that type of thing. So with that, a couple thoughts I did want to just kind of get everybody ready for on the audit front is, it's a transition. You do have a new auditor or new audit firm coming in this year. So with that, my expectation from what, kind of we've seen, some of these discussions about the budget, other maybe procedural things where obviously there's been a lot of turnover and work, you have a lot of a fresh look being taken. My expectation is that compared to this historical chart I compiled of just your last 5 audits, what the audit opinion was, what there were for findings, I would expect to see more findings in the current year audit. Again, most of them I would expect are going to be policy and or procedure driven, to say, hey, we noted that this process has been lacking and there's an opportunity to strengthen it. So just in terms of setting up that expectation that if the auditors come back in 2 months and they have 5 recommendations or whatever else, that that would not be a surprise to me. I did summarize here the comments over the last few years, and to Scott's point, just again to help set those expectations for the audit, the required annual audit is a financial statement audit. So as Scott said, the objective is the auditor say these numbers are good. So when it comes to the budget and otherwise, and we say, what do we have in reserves, that those numbers are reliable. That's the objective of the audit. It does not audit the city's internal controls. It's not a forensic audit that goes and looks for fraud or looks at every transaction, but really it's a top-down look overall at the activity. One thing that I will note is with the arrangement and the one comment that had been there all in the middle of the significant deficiency. So that the first one in the 22 audit is the one Commissioner Catagano, that material weakness was the budget comment that you were referencing. The second one that had been there basically every year in 2019, I think they intended to have that comment and they just forgot to put it in there. The significant deficiency comment that had been there related to segregation of duties, where basically your prior administrator, kind of did a little bit of everything. So one thing that I do see just in terms of as a benefit to the city and going forward may help mitigate a lot of that component of that comment is our involvement. There is some inherent segregation of duties now, as opposed to, if Jerome's doing everything or Aaron's doing everything, where, you've kind of got this outside involvement on the back end on the reconciliation process, versus having the same group cutting checks as you have on the back end. So it is one additional safeguard that will help remediate that. But again, I would expect there to be a series of items that they say, hey, we know this process might be lacking in internal controls a little bit or could be strengthened. So that's one where my expectation for that would be probably more comments this year and future years, and we expect to help you guys get to having a clean audit, which I don't know the last time the city had a totally clean audit in terms of any findings. There has been an unmodified opinion. That means that the numbers can be relied upon. I kind of always, when I present audits, I say the opinion is kind of like the diploma to say, okay, you got an unmodified opinion, the numbers are reliable. The report in the back where you have those internal control recommendations and comments, that's kind of like the report card. So it's one where I would expect to see more items to look at on that report card in those reports, but that's going to be one ultimately that Jerome would be tasked with working towards tackling those, and we will certainly be a part of the team to help work through those and figure out the best way to handle. But just didn't want to highlight that. So again, when the audit's presented, there's a bunch of findings. Not to be alarmed as long as there's nothing that's as long as it's policy procedure oriented and that kind of thing, versus any major bigger concerns, which from what we've seen wouldn't expect. But again, we weren't really directly involved during fiscal year 23, so can't speak to it as directly as we could for the last few months that we've been seeing more in real time. So just want to kind of quickly set that up in terms of the audit, what to expect there. All right, so first audit, any questions on the audit front? I think I hit the main highlights. Change in auditor, expect probably more comments this year. All right, so for the fund balance, this is as again we're talking about the general fund in total, looking at your assets minus liabilities. So generally this is your cash, any accounts receivable, monies from the state that just haven't come in yet, those are there in assets, and then your payables generally are just going to be accounts payable for invoices that come in October or November for work that was done before September 30th, so that we're kind of capturing everything in the fiscal year from an accounting perspective in that period. So when we take your assets minus your liabilities, your total fund balance, again, this is what I would kind of say is the total reserve of the city's general fund. So these preliminary numbers, again, are pre-audit. Wouldn't expect any major changes, but changes are possible. Total fund balance just under $1.5 million. You see that 1.4 million, 52,000 in the 2023 column, and the different buckets there are driven towards basically saying how spendable are these dollars. Non-spendable basically is just like it sounds. You can't go spend it on something else. What that 3,000 relates to is any prepaid expenses. So I think we had an insurance payment for October that was paid in September. So the accounting theory says, hey, this cash already went out the door. We show an asset as a prepaid on our balance sheet, but we can't go use it on something else because it's already been spent on insurance. That insurance was just for next fiscal year. So that gets backed out as non-spendable because we can't spend it on something else. The restricted, this is primarily related to the building department and revenues there. So any permitting revenues that come into the city, state statutes say that permitting revenues can only be used as part of the expense of enforcing the Florida Building Code. So we can't collect permit revenues and use them to subsidize the rest of the general fund. So that is basically tracked within to say, okay, we know where we were last year. We add in current year revenues, reduce any expenses, for inspections, that type of thing, and that becomes that restricted for building, the building department effectively fund balance portion there to say, here's $211,000. We can't use that for anything else. It can only be used, towards future years when we have more in expense than revenue, or in theory, eventually, reducing or items like that would result in having more in expense than you had in revenue. So that's why that gets showed separately. Committed would be if there was a restriction put in place by the commission through either a resolution or an ordinance. So if there was a resolution that said we're going to set aside this much money and it can only be used for this purpose, that would then get moved into committed. If there was a new revenue stream, like let's say we adopted an ordinance to charge for parking out there, and the ordinance said that the parking fee revenue could only be used to pave a parking lot there, that would be a committed fund balance where any of those dollars that came in, those had to follow those explicit rules. So there's nothing that met that criteria, but that's again effectively when there's a formal restriction set by the commission on what either a bucket of existing revenues or existing dollars can be used for, or there was a revenue stream that you said these revenues must be used for this purpose. So again, nothing there, but just want to kind of hit that theory as we work our way down. Assigned, this is going back to when we talked about encumbered or earmarked. This is the closest presentation there. And what this relates to is as we get to the end of the year, if we have any known uses of our reserves. So this could be, for instance, we had $10,000 in our fiscal year 24 budget that we said, hey, we're going to appropriate $10,500 out of reserves to balance the budget when we were doing that. So that gets pulled up into assigns because we've effectively earmarked. Again, kind of the closest thing to encumbering without having a formal purchase order system. So that assigned number, what we plan to have on the audited financial statements is there's 3 different buckets in there. Last year, everything, that 1.1 million plus the 215,000, you see the 2 bottom lines in the 2022 column, those were both shown as unassigned. So your unassigned went from about 391,000 to over 1.3 million. That was, of course, due to the ARPA funds. And the way I kind of looked at it is the ARPA funds, those are not operational monies that we just had a natural surplus. Those really are different monies. We want to be able to kind of account for those separately and say, here's what we used those ARPA funds for. So what we've generally recommended is, absent of a policy to commit those, which I'll probably be discussing with Jerome at some point and potentially bring back to you all, just to have a policy around the ARPA monies and the use of those so that there is the accountability and transparency over those funds. Yes, Mayor?
Fiscal year 23 amounts include ARPA, 910,730. Where did you get that figure?
So that was the total award, that 1.1 million last year, less, I believe there were, was it vehicles or?
Vehicles and a tractor.
Okay, vehicles and a tractor that every indication we had was that the intent was for those to have been purchased out of ARPA funds. So that 910 is the difference between those two.
Because in my review, I know where $545,445 is. It's in a separate checking account or a separate account. The other $545,445 was put in the general fund. There's no accounting on how that money was spent. We assume, you know what that does, that it was used for the various vehicles that were purchased. So that figure bothers me because really don't have $910,000.
So what my recommendation would be related to the policy, again, my recommendation would be that it's committed. So there, if it's assigned, that's again kind of earmarked. There's no formal, that's just saying here's kind of, what we've set aside. Jerome has the authority to assign effectively. There's no formal process. My recommendation, what we've done at the City of Lake Helen, where we work in a similar capacity, is to establish a policy that says, the ARPA funds can be used for whatever we decide, but nothing shall be considered spent out of the ARPA funds without explicit commission approval. So probably what my recommendation here would be is to adopt a similar policy, because again, it gives the transparency, whether it's to the public or the federal government. You want to be able to say, we got $1.1 million. Here's what we did for the city of Oak Hill with that money. So that helps ensure that. What I would recommend with it is, that change was, I think, from discussing with Aaron, as someone that was at least here when some discussions were held. What I would recommend is to have the either retroactive, we think that was the intent, let's formalize that, or let's move it back to the 1.1, that if that were the intent, that basically be ratified, and we say, hey, we are deeming these purchases to have been out of the ARPA funds. But then going forward, in that fiscal impact, let's say we said, hey, $60,000 for playground equipment, what is the fiscal impact? Jerome might say, hey, this is to be spent out of the ARPA reserves. And then by having that full connection, we would have the basis to say, okay, the commission approved this money being spent out of that ARPA bucket. So where this came in was kind of a rough estimate, but as you mentioned, there's been no, in the last, 2 years since that first payment, no direct controls over that accountability of the ARPA fund. So that's where that came into being one of the recommendations that I would bring to, Jerome, for you all to consider, to adopt that policy so that, we can tell the story and very clearly say, here's what we did with the ARPA dollars.
Well, Zach, I came across a report in data files. I can't remember the specific numbers. I know 18,000 was for, and I'm going to use the term employee bonuses. And then the other was 200 and X number of dollars to Volusia County Sheriff. But there's no date on that form. And also, because the city is so small, we're not required to send reports. You have to be over 250,000 residents to require reporting. And if you look at that, then that $910,000 doesn't add up. If that was actually I know the 18,000 was spent because we approved it. And the sheriff's department, I'm just going to say that was the monthly, or not the monthly, but the quarterly payment to the sheriff's department, because they're at $600,000 a year. And I guess I'm just aggravated because there wasn't a separate ledger to where that money was spent. I mean, I can account for half of it, I just can't get the other remaining. It could be still in the general fund for all I know, and I'd like to say, oh, look, when they wrote the checks, they didn't even put on the checks that it was ARPA money. It just came out of the general fund.
Yeah, and that can be done from the accounting perspective, but they're just, again, there was not historically, I think, kind of those controls in place or understanding of, I was going to say fund accounting, but we have currently one fund for now.
Yes.
But that's, again, where when everything's there, it comes down to what's the process and the controls over the process, because the ARPA money effectively is unrestricted, so there's no kind of hard line, but that's where I come back to saying, hey, because this is still important, we want to be able to tell the story. If the federal government ever asks, so that you all know, the public knows, we want to have that accountability and transparency over it. That's what brings me back to, actually, I think on a slide or two, I did have ARPA on there to kind of touch on that. So we'll hit that a little bit more if that works.
Thank you.
I was under the impression that, I thought from some discussions that we've had here in the commission, that the ARPA funds were for infrastructure.
That's one of the items that it could be spent on.
I got you.
But Jerome's been doing some research with different other cities, and because we're so small, we can spend it on anything.
Yep.
So, speaking out of turn, this budget, we got $500,000 for stormwater. And let's hope the governor doesn't redline it. But if not, then repairing the pipes at the 2 locations, we can use ARPA money to do that.
So just to, I'll close the loop on ARPA now, because I did have a couple notes on a future slide. I think we're talking about it. It's relevant. So the federal government did, at one point in clarifications, put in what they called a standard allowance for any governments that received under $10 million in ARPA funds. You could elect this standard allowance that basically said you could use on paper any general government expense to basically earn the money and be free and clear of any federal red tape. So we actually consulted with about 50 different municipalities and counties across the country, a handful that were outside of Florida. On this, we had kind of tailored a product focused on smaller governments to basically say, hey, don't go spend tens of thousands of dollars for a grant consultant, because I kind of learned in our little narrow experience that some of these big grant consulting firms, when there's something like that, they're like a shark that smells blood in the water. I mean, we had probably a similar city that we billed about $5,000 to kind of handle everything on their ARPA reporting, and they were one where we almost stopped because they had paid another firm $10,000 basically for the privilege of calling them their ARPA consultant before they even did anything. So I kind of learned how that works, and we basically again 50 or so clients learned all the ins and outs of the standard allowance, and that was one I might have where in looking at your ARPA reports, I don't think they were quite done the way they were supposed to do. The standard allowance was elected, so the most important thing was done, but the details of it, I was kind of like that. So we will be talking with Jerome about that, because the next report is due April 30th, because you still have to report every year on that. So we've talked with Jerome, not about the details yet, but just the fact that we'll be talking about it once we kind of get some of these other things behind us. But it is one where, again, when I kind of looked at it, I don't think everything was quite done the way it should have been to make sure you properly reported how you're doing this. But the approach we kind of took was the standard allowance said any expense you could use. So what we would basically do is say, on paper, we are going to use the ARPA funds and we're going to claim payroll expenses, the sheriff contract, just very clear, distinct expenses, and say, hey, because you said we could use it on anything under the standard allowance, we reimburse ourselves for what we were already spending. That's where the policy comes into play, because basically what happened, if we had worked with you all 2 years ago and kind of done this, is we would have said, here's payroll, sheriff, other kind of basic expenses. We do this to meet all the compliance rules of ARPA. Here's a $1.1 million revenue. We now have earned this free and clear of the federal government. Then what the policy did was said, yeah, we've earned $1.1 million, but we still want to have that accountability over how we put it to work in terms of the new expenses, what we actually do with the money, not how we meet the federal rules. So what that policy would do is say, we got $1.1 million from the federal government free and clear, but we are going to commit an equal amount in this ARPA fund that, again, to spend money out of this ARPA fund, it's going to require commission approval. So that was kind of how we handled it back then, and how that kind of policy that I was talking about would tie in to say that we're getting the money free and clear because of that standard allowance that said, again, under 10 million, you can spend on literally just about anything except putting it into reserves and just saying, hey, we're just taking it free and clear. You've got to identify an expense, and as long as it's any valid expense under 10 million would be acceptable. Talking about materiality before, we kind of learned, okay, $10 million is what's de minimis or material to the federal government, apparently. So that's kind of the ARPA.
Let me ask a question. So we could report to the federal government that we spent the ARPA funds on legitimate purposes, even though we budgeted and actually spent the money from our budget on those expenses. They don't really care where the dollars come from. Okay.
As long as you've identified valid expenses,
so that kind of frees up the money to do whatever we want with it, for
Exactly.
sure. But because we budget to pay for the sheriff. So that money came out of our budget, and that's how we paid for it. But we reported to the federal government, we paid for it with ARPA funds. So leave us alone. We've explained to you how we did it, but we actually set the ARPA money aside, and we funded it through our annual budgets, these expenses. But we're telling you we paid for it with ARPA because that satisfies you to check off the box and say we're in compliance.
Yeah. And then it makes it simpler. So if we, do say we're going to go spend this on an infrastructure project, we still would bid it out, but we don't then have to follow any additional federal procurement rules, things like that. So it's basically just a cleaner approach to meeting all of the federal red tape to then say, hey, we've got this money, let's put it to work in the best way that we feel possible. And because we're under $10 million, we've now got that free and clear. So again, as we work through that, it would really be next year that we'd show it differently. We certainly, if we say, hey, we're going to show the whole amount as assigned, we certainly could still do that. That was, again, just from discussing to say, hey, it sounded like the intent was, because there was still no formal restriction over it, that's where I just kind of, again, anticipating those numbers for discussion purposes. The other item that we did intend to show as assigned was the $111,000 for the ECHO grant match, knowing that that was not in the budget as originally adopted, but that would be basically available in terms of rolling that forward. I think there was, from what we heard anecdotally, there was intent for it to have been paid for from savings in prior years, but again, each budget stands alone. And in anticipating that there would be a budget amendment to cover the city's share of that, we did figure it made sense to show that as earmarked or assigned for that match. And then what that leaves us is the unassigned reserves of $204,000, which is kind of your no strings attached. What's left over after we back out, what's restricted, what we've earmarked, and everything else. On the next slide, and this kind of will tie into some of the reason for that, is what I've done is backed out the ARPA funds in that assigned and unassigned, because again, the ARPA funds were a one-time windfall from the federal government. We didn't get it operationally. We're not going to spend it operationally, because if we did, that would mean we'd be running at a huge deficit, and the minute those monies run out, we'd have a big problem. So I backed those out for now to say, hey, let's kind of say operationally, where are we at? So excluding the ARPA funds, the assigned and unassigned, so our unrestricted reserves are about $326,000. Our expenses, which I excluded the grant-funded capital activity, about $4.3 million, to again try to say where are we at operationally as much as possible in terms of unrestricted operational reserves versus not the grant-funded stuff, but just operationally. About 2.2 million was what that number looked like. That gets us to a percentage of 14.6, almost 15%. It's just under 2 months in reserves. The GFOA, which is the Government Finance Officers Association, recommends a bare minimum of 2 months. So we're a little bit below that minimum, considering being coastal, small, where just as a percentage it doesn't go as far. 16% to the city of Daytona Beach is a lot of money. For Oak Hill, that it's really almost the dollars in some ways that are more important than the percentage, because we're so small to begin with. So with that, not one to alarm everyone, but is one that, we are on kind of the lower end. We are below that minimum recommendation. So one item, that we talked about with Jerome a little bit and would recommend is that there be some discussion to say, okay, let's discuss and maybe even adopt a fund balance policy to say, as a commission, where do we want to be? Do we want to have 3 months? Do we want to have 40%? What's the number in terms of saying, what's our potential risk and exposure from hurricanes and everything else? And let's figure out where we're comfortable being, because I kind of face value would say, okay, we're pretty low. There's not a whole lot in reserves there in terms of if we come across a major contingency. But this, really is one that's a policy type decision, because there's all sorts of schools of thoughts of, how much is enough, how much is too much, and everybody has different levels of risk tolerance. I always kind of say, some people, would say, hey, I want to have I'm good living paycheck to paycheck. Someone says I want to have 6 months in the bank, and somebody says as long as I'm getting breakfast tomorrow, YOLO, I'm good. So it's really one where I think having that discussion again, a lot of these things being like, okay, you got new administration, we're excited to be on board. Let's really kind of set a ground floor and move forward and kind of say, where do we want to go, and let's build towards that, work towards that, and really kind of flush out talking about fiscal impacts, things like that. Let's have a baseline to evaluate against, because if we know where we're going, we can compare how we're doing in terms of getting there versus just kind of drifting, and wherever we end up is where we end up. So that will be something to come as well. But did want to highlight, at least looking at these preliminary numbers, that we are a little bit below industry recommendations in terms of what our minimum reserve levels should look like. Any questions on the numbers there, reserves, or anything else before I hit some just the other different recommendations that we've kind of got to date from the work that we've done?
And when you did the 111 for the ECHO grant, why did you use that number instead of the whole number that's indicated in the resolution?
So I think that was the anticipated match, where the other 111 would be paid for by the county. Was the expectation as part of that grant?
It was matching funds up to 144,892, so it's like $33,000 shy of what the resolution is.
I think the match was 50% though. So we're basically, the match is the lesser of half of the total project or the 144.
So the whole thing costs less, so you just divided that in half and came up with this number? Is that what's happening?
Yeah, that's half of the project, since there was more room for the project to still be getting that 50-50 match.
I see.
Yep.
Thank you.
So the 2-month minimum is normally the 2 months that you explain between October and January while the funds that are coming in that we haven't gotten yet for the new fiscal year. Is that what you're talking about? Keeping the 2 months?
Not directly, because that's just your lag on some money coming in, but you've got a lag on money going out the door,
Right.
as well. It's really, the way I think about it is, you kind of compare it to think about personally, to say, okay, out of a job, major medical issue, whatever, could come across, your life personally, how many months do you want in savings?
Okay.
Basically, it's that same kind of thought process.
Okay.
So that's again where, different people have different area, risk tolerance levels. But that's why I oftentimes will recommend saying, hey, let's discuss and, if possible, agree on a policy, because if, it may be, we go around the room and we say 50%, 10%, 30%, 100%, whatever, and then work through that, because we have all that. If you have no guidance or just a bunch of different opinions, Jerome has no direction.
Right.
If we say, here's the opinions, and we want to have a target level of 40%, we understand that we are below that, and we want to get to 40% in 3 years, or whatever it was. Say that was the direction. Well, now we've got a clear plan to say, okay, that's now going to be a component of the budget, because we're going to say, here's the budget, and part of the use is to build up that reserve to that target level.
We can make the decision during the commission meeting, but I think we ought to talk about having a workshop to get all what goes into that, what are the different levels of risk, and why, you were bringing up a point there that the last 3 months of the year are, we're scraping the body. Is that what we want to go with? But that's something we need to lay the layers out in there to make sure.
What I would say is to look at also, this is a situation where looking at your personal finances and looking at the city's finances, in my opinion, doesn't really correlate, because you're not getting fired. There's not going to be a situation where all of a sudden you're out of a revenue stream. And if you are, if the year comes around and all of a sudden not a single property owner pays their taxes and the state's not distributing money, you got a lot bigger issues. There is, you got to start killing zombies or something like that. There's a big issue about that. So what I would suggest you look at is emergency funding of, historically, what have we spent when we've had hurricanes? How much money have we spent on cleanup that we're gonna have to wait years for the federal government to reimburse us. Regardless of what you do, you're gonna have to wait a long time to get reimbursed by the federal government, or some jurisdictions have to go out and borrow the money, because you're gonna wanna clean it up. So you're gonna have to come up with a way to pay it, and the federal government is not going to do it quickly. Although there's a program now where you can get pre-qualified to get reimbursed pretty quickly, up to 80% or something like that, that we should look into if we haven't. But that's an important thing. Look, a cash reserve where if we have an emergency expenditure, how much do we historically spend? You can look at FEMA costs over the last 10 years, or not FEMA costs, but hurricane response stuff that we've incurred. What other types of situations where we've had to make a cash expenditure that was unanticipated? Even though you shouldn't say you probably anticipate hurricanes, but that's not something we budget for. And that's really what to me, that's what the reserves are. I know this is kind of a general statement for, so many months, but I would look at what have our historical expenses been on these unanticipated items, mainly a hurricane and with cleanup costs. How much money have we spent in cleanup costs? Because if we don't have it in reserves, you're gonna have to borrow money.
All right.
Well, and that goes along with what I was in on one of the other slides. We've got a difference in the Waste Pro revenue versus expenses. Was that hurricane pickup, storm damage? All right, that kind of stood out at me at where that came from, and so, but that's kind of in line with what you're saying.
But it's very good to have money set aside. My focus would be on what would be the potential expense as opposed to the number of months and percentages. I would say, okay, look, historically we spent $300,000 when we've had a hurricane come through here. We need to have 300,000 reserves just to be safe. Now, whatever percentage that is, however much that comes up with, that's what it is. But that's how much, and we probably ought to bump it to account for inflation. That would be a suggestion.
That was one of the reasons when we started that emergency fund a few years ago, was to start building up a reserve fund so that we do have monies available if we have to tap into them quickly because the trees are covering all the roads, or the roads have been washed out and we have to fix them, or whatever, and then we can get it done and then, supply for reimbursement
I've
later.
known cities that had to borrow money
Yeah.
to do that, to get reimbursed, and had to refinance the first one because FEMA took so long to reimburse.
Yeah.
Yeah, and then you're paying, high interest rates as well, which ties into the next piece. So a few kind of recommendations. First, a few in general, and then a few specific items to think about. Again, most of these are areas that there will be more to come, or otherwise, but just want to kind of discuss briefly. One of the recommendations will be to, just move to where we have more of a pooled cash method. So for instance, instead of having a separate account for the emergency funds, we can have a policy and then basically kind of track that. Like at Lake Helen, we update that as part of the budget every year to say, hey, based on the policy, here's where that is. But it just simplifies things, not moving back and forth between separate physical accounts, and we can do all of that from an accounting perspective. So we will be, suggesting to, cut down a little bit there, but it won't change anything from the accounting perspective. It'll just basically simplify things from an operational, transactional perspective, when it comes to cutting checks, making deposits, things like that. The other big one, talking about interest, is, and we talked about this with Jerome last week, is probably the most pressing recommendation that we have is going to be to get into a situation where we are earning interest on cash. Currently with Truist, the rates are exceptionally low, like the 0.01% or whatever you would kind of get typical of many big bank savings accounts. Rough math, looking at $1 million or so in the bank on the low end, which again, we're higher than that now and will come down over the course of the year. We see cities, pushing 5%. So I look at, the low end, say $1 million, whether, talking to Jerome, I was like, I would pretty much, demand that Truist, establish a sizable interest rate or, immediately start shopping the city's business elsewhere, just because, 4 to 5% over $1 million, we're talking an easy $50,000 a year in interest income currently. Obviously, rates may come down, that the city is not getting, and that's without exposing to any risk or otherwise. There are state pooled funds that we could look at as well, but I know a lot of banks are paying interest on the regular business accounts, things like that. So that's kind of one that is on my radar to say, hey, if we can act and start making the city $4,000 or more a month in interest income, that gives us a huge head start when it comes to maybe not just the upcoming budget, because we can't rely on it. We don't want to assume we're going to get that rate the entire next year. But again, just to give the city as much flexibility as possible, I'd much rather have an extra $50,000 than not over the course of the year. So that's kind of our biggest recommendation there. And Jerome will certainly be glad to assist as much as we can with any of the logistics on that. Fund accounting, again, getting kind of into what we see with many governments is you have different accounting funds. So going back to the cash side, kind of the beginner level for a smaller government normally is to have separate bank accounts, just because you kind of see it. You might not have the technical skills on your accounting team to be able to properly manage that, so it becomes kind of a way to segregate. From our standpoint, where we've got the accounting side covered from the physical bank account side, the other recommendation that we will have is, given all of the grant money that's coming in, we talk about monitoring the general fund. I did those reserve numbers and had to back out the grant activity to kind of say, here's an operational number. One of our recommendations is going to be that I think we would do it as a mid-year budget resolution to basically spin off the grant activity into a separate fund. And then when we adopt the upcoming budget in September, we would have a general fund and basically a grant and related fund. And what we would then do is all of those state grants, everything running through there, we would put into that separate grant fund to kind of get a clear picture of operationally, when we're talking about the millage rate, the operating budget, the general fund, here's where we are. And then the grants would be entirely separate, just to make it a little bit easier to digest. Because even for us, as we were going through, cleaning up, understanding everything in fiscal year 23, there's so much other activity going on for the city that it's not like, okay, we get one grant here and there, no big deal, but we've got so much, even more in dollars than what we have operationally, that it was my thought that it'll make our lives easier, and it'll also provide a lot more kind of transparency to everyone to understand, okay, well, here's all the grants in their own fund, here's the true operating general fund that most of those baseline revenues apply to. So that will be coming down as a likely recommendation. And again, there would be a budget amendment to spin that off mid-year and basically create that new fund. The fund balance policy, we already discussed that basically in totality, so I do not need to hit that again. ARPA, we did discuss in terms of the thought to establish an accounting policy. You can kind of see I like policies. But again, I think at the end of the day, that the more you have in terms of policy, it governs how everything is being handled from a financial capacity, and gives more oversight and structure, which from some of the comments talking about budget and otherwise that maybe have been lacking at times. So I think there's a lot of benefits to looking at adopting some of these different policies. I did talk about ARPA, where I think we may need to kind of redo / correct some of the prior reporting. Solid waste, this is in general terms now, as we kind of looked through and said, okay, what was paid? I don't know the answer to the question of what were there one-time items with debris and otherwise. I believe those were separate off the top of my head, but I would want to just go look at, what was the most recent month for a baseline of service. But it did look like that there may be a shortfall. That'll certainly be something that will really nail down those numbers as it looks going forward. But that may be something that we need to consider looking at and saying, okay, if we go look at those numbers, here's the existing assessments, here's what we're currently getting billed. If there is a shortfall, it would be something that I would propose discussing as in one of the budget workshops to say, Do we want to keep the solid waste assessments where they are and subsidize that out of the general fund, or out of basically ad valorem taxes, or do we want to get all of that focus and try to make the solid waste assessments as one-to-one as possible, if needed? So again, just kind of planting the seed for now that'll be something that we'll probably be talking about later on. Again, with pretty firm numbers when it does come time for any actual discussions. Then a couple legislative items, again, throwing as much out there as we can, trying to hit every aspect. I'm not sure if where these ended up, but there were discussions, of course, on the homestead. That's really the big one for an additional $25,000. I had at one point the number, I believe it was about $100,000 impact one-to-one, but don't hold me to that. So that will be something that will not impact the current year, but I think would be the year after. So again, just something that we will be monitoring, that there would be an impact. And then there were also discussions looking at Florida retirement system benefits for retirees to basically increase the retiree benefits, and that was potentially going to increase FRS contribution rates by about 4%, which would be about a 25 or so % increase in the city's retirement expense, assuming a flat payroll. So just putting out, again, things out there to say these, we'll be monitoring, dealing with them in the budget process, but didn't want to highlight those as different factors that have been out there and are being discussed at the state level, which of course, could increase the cost to the city, the way it seems like things always go. So that is everything in here.
All right, thank you. We need a motion.
Motion to adjourn?
A second.
So be it. Workshop adjourned.
Thank you, Zach.
Give us about 7 minutes or so
Stretch our
before the
legs.
commission meeting.